Thank you, and good morning, and welcome everybody to this session of the CEO Summit Dialogue on Global Finance. Everybody in this room knows that you don't get economic growth without a well-functioning financial sector. But I'm afraid everybody in this room also knows that a financial sector with excesses can be a dangerous one as well. This session is going to explore the future of global finance. We're going to ask, is the global financial system vulnerable? How can trust be restored? Are necessary reforms in place? Is more regulation required? And what other insights can we find from this? And to answer these questions for you, we've got a very strong panel this morning, which I'll be very pleased to introduce in turn. The panellists will each speak for a time, then we'll take some clusters of questions from the floor and come back to the panel. We're interested in provoking an interesting, insightful discussion where we can get to some interesting points. Well, it's my very big pleasure, first of all, to introduce the Prime Minister of New Zealand, the Right Honourable John Key. He's had a very long and distinguished career actually in finance and banking before he decided to also make the switch into politics. And in 2008, it was the very middle of the financial sector crisis. We were both there at the time, so we're nodding knowingly. He became Prime Minister of New Zealand. There's probably better times to take on that position, but he's been very successful in there, and proof of that is that last month he won a rare third term in office as Prime Minister. Prime Minister Key, over to you. Thank you.
Alan, firstly, can I just acknowledge you? Alan, as you may know in the room, was Reserve Bank Governor in New Zealand, as you mentioned, when I first became Prime Minister in 2008, now APEC Secretariat. Can I acknowledge my fellow members of the panel? One of the questions that's been posed to me is there vulnerability in the global financial system? I think the answer to that is strikingly obvious, which is there is always the potential for vulnerability in the global financial system. I think there's always that potential for a variety of reasons, but the first of them is just the interrelationship and the connectivity of the global financial sector. And that's really what we saw with the global financial crisis, that capital knows no boundaries, it flows around the world and it flows to where opportunities are. And because it flows so freely these days, I think the big risk actually for us in one area is that that free flow of capital creates bubbles. So to a certain degree you can identify that in the US system when the global financial crisis came. It in part was the nature of the products that were created, subprime mortgages, which were inherently unstable actually and ill-conceived in their concept, but it was actually the underlying asset that they promoted, which was an overinflated housing market in the United States. So it was the two together. So firstly, I think the view is that, my view certainly would be that the global financial system always has that capacity to be vulnerable. The second thing I'd say is that the risk is varying depending on the nature of the providers. So in New Zealand we have a very strong banking sector and an increasingly stronger non-banking sector. And those two now live sort of happily together. And as a result of the global financial crisis, there are a significant number of changes in the non-banking sector. That's certainly where New Zealand experienced losses and defaults. It wasn't in the banking sector, it was in the non-banking sector. And in fact, there are a number of changes that I'll talk about in a moment. But again, I think one of the really interesting things that will change around the world is what role the internet plays in the provision of financial services. So if you take Alibaba as a good example, seeing we're here in China, as you probably know, is an online trading platform, Alibaba is extremely significant. So its turnover these days is larger than eBay and Amazon combined. I think its ambition within a few years is to be larger in turnover terms than Walmart. It's pretty natural, I think, that you will start seeing these sorts of platforms being the kind of place that financial services will also be provided to support the underlying commerce and ultimately to open up new opportunities. So ultimately, whether it's an Alibaba or a financial platform that comes from one of the established providers, you are going to see the internet really, really opening up those opportunities. Secondly, I'd say about the vulnerability is it sits into two categories. One is leverage, and the second part is liquidity. So what's happening in terms of leverage is that leverage is the real area where that vulnerability is exposed, because in terms of investments around the world, it's one thing to have an investor putting money in what we would call a real money fund, but backing up absolutely the underlying investments. Quite a different issue once you have leverage taking place. And we can see the growth in those leverage funds around the world, and increasingly leverage is being moved out of the traditional financial institutions because they are much more heavily regulated, moving into fund managers and the likes, and I think that does create some vulnerability in the kind of world financial system. And what we know is once you put together high degree of leverage, mobility of capital, then inevitably you get liquidity issues as people try and exit markets that are not performing well. From New Zealand's point of view, our banking system's strong. So the World Economic Forum just ranked us as the second most sound banking system. As I said earlier, in the banking sector there were no failures, but in the non-bank system after the global financial crisis there were. And that led to two changes in New Zealand. The first was the establishment of a single regulator, the Financial Markets Authority, and the second thing was a much greater role in supervision of the non-bank sector from the Reserve Bank. I think the question around financial stability is whose responsibility is it? Well, in the first instance, clearly it's the government, but I think it actually stems further than that. I think it's a huge responsibility of the institutions themselves and actually of the investors. And if you look at what happened as a result of the global financial crisis and the collapse of a number of the very significant investment banks, in the first instance, it's clearly was the responsibility of the regulators to make sure that they didn't put themselves in the position they did. But it was also true that the investors, if they were really understanding those risks, would have put much more pressure on the institution. So one of the things we've tried to do with our regulation in New Zealand is to make sure actually that there's far better understanding at a retail level of the risks and the leverage that those institutions have. Second thing we try to focus a lot more on is the intercompany lending and the exposures that are created as a result of that. Probably surprisingly for a politician, but maybe less so because of my background, I don't actually think the answer's in more regulation. I think it's in better regulation and flexible regulation. Actually, there are a number of countries around the world where you can point to a significant build-up in the level of regulation, and all that's doing is forcing financial institutions either to relocate to another jurisdiction where the regulation is not as tight, or secondly to move it out of the regulated part of their sector. So in my view, we need to actually drive that better regulation. Just lastly, in terms of APEC and its role, if you think about APEC in the 25 years it's been in existence, APEC's been a big driver in terms of economic performance. So if we were at this conference talking about the capacity to trade, the capacity to drill in behind the border regulation, our ability to grow each other's markets, then APEC's been, I think, a staggering success. And we have the potential from the forum of APEC to drive much greater trading relationships. We're seeing that with TPP, we're seeing that with RCEP as a concept, and we're seeing that with FTAP. The real issue, I think, around the financial part of APEC is that in the first instance, we tend to think of APEC as trade and to a certain degree as investment. But what you are increasingly also seeing is financial integration in the region. From New Zealand's point of view, to give you an idea of how significant that is, 3/4 of all of our exports are into APEC countries. So the 21 countries in the economy of APEC represent the bulk of where New Zealand's economic activity is being undertaken. And what you're seeing in a place like New Zealand is that level of financial deregulation and the increasing role that those lenders in the region are taking is reflected in the makeup of what's happening in New Zealand. So, for instance, if you look at some of the major Chinese banks, ICBC, Construction Bank of China and the likes, they are establishing themselves in New Zealand, and they are starting to take a much more interested profile in some of the very big financing opportunities, particularly around public-private partnerships and the other consortiums that we see in New Zealand. And in our core agricultural sector where New Zealand has great strength, Rabobank has been one of the big international lenders really starting to lift its activity. So my view is, yes, there's vulnerability in the system. Yes, we need to understand how to manage and control that better. Yes, we need regulation, but we need the right type of regulation. And I think finally we do need to work on making sure as we expand the trading and investment profile of countries in APEC, we also need to think about the financial integration.